All right, my people, welcome back. Welcome back. So, you should be familiar with the candlesticks by now, right? You took your time, you did some studying, and you figured out candlesticks, right? Now we're going to go over support and resistance. This is the next step to mastering price action. Okay, so let's get into support and resistance. Support. Support is a general area of interest prices have trouble breaking below. Three or more touches are necessary for an area to be deemed a level of support. Think of support as a floor. So you'll notice prices will rally, come down, not break through this area here, come down again and not break through this. Once we get at least three touches, we can deem this area support, right? We could draw a line or we can draw our area around these price areas on the chart, and that'll be support. Support is good to look at for buying opportunities. You'll notice that price, because it's like a floor, price will continuously bounce off of these support levels, and you can look for buying opportunities in this way. All right. Resistance is the opposite. It's the same thing as support, except more like a ceiling. Prices rally and can't break above this area. So this will be resistance. Prices resisting breaking through these areas here, right? Three or more touches, just like support. Once we have at least three touches, we can deem this area or these levels as resistance, and we can look for selling opportunities. We can wait for price to react to these levels and look to sell, right? Okay, let's look at the charts and get into some real life action. All right, so here we go. We're currently on the QQQ trust. We're on the daily chart. Okay, we got our candlesticks, which we just learned, and we're gonna mark up some support and resistance levels. So these are the things we need to remember. Three or more touches, right? That's number one. Three or more touches, and we have a resistance level or a support level, right? The higher time frame levels hold more weight than the lower time frames, and I'll explain why. I'll show you why in a second, right? And you want to look for buying opportunities at support and selling opportunities at resistance. Okay, so it's really about training the eye, right? We want to train the eye to see where uh, price is most interesting, right? Where buyers or sellers are most interested, right? So automatically, I see an area here, right? This area here. Prices continuously bounce off of this area, even though price broke a little bit under, right? Price opened up and was under this level. This is a good area of support, right? So what I'm going to do is I'm going to take my line tool, or actually I'm going to take my horizontal line tool, right? And I'm just going to click here, just like that, right? You can make it any color you want. You can open up the settings by double clicking it and go on style and change the color, change the type of line it is to a dash if you want to do that, whatever suits you, right? I'm going to keep it like this for the lesson, right? This is a good area of support. You see how price comes up, price came down to this point here, went up, came back down. There's some choppy, came back down again, went up a little bit, came back down again, right? These are all buying opportunities here. Buy, up, buy, up, right? You look for buying opportunities at support, all right? Now let's look at some resistance. Resistance. Let's see. We have to train the eye. We have to train the eye. We have to be able to see these in real time, right? All right, so here's a good one, right? You'll notice price comes down, comes back up. Major action right here is having a lot of trouble, and because we're on the daily chart, this is days of price not being able to break above this level, right? Price comes back down, broke above a little bit, came back, retested it again. Selling opportunities at resistance. Remember, we want to sell at resistance, selling, right? Again, selling, right? Let's move over a little bit. And price had some trouble breaking through this area for a few days, and then eventually it broke above, right? Okay, so we got that understood. Now we can keep our levels, right? Excuse me. We can keep our levels. So now that we have our levels, right, we have some key levels of support and resistance. We'll also notice how support can become resistance and vice versa, right? So this resistance here, price eventually broke above it. Price eventually broke above, came back down, retested this area here for a few days, went up a little bit, retested it again. Now this resistance becomes support, right? You see, price broke above, came back down, retested it, and now we can look at this as support, and we could look for buying opportunities. Buying, right? That's a nice amount of change right there when you buy. If you would have bought here, that would have been a nice amount of dollars right there, right? Let's see support becoming resistance. All right, so this is the line we drew, right? If we go back, we'll see that this was at a time support, right? Prices touch, came back, few days touch, it broke under a little bit, came back, retest, right? Retest again, and then you bought. You could buy. Come back down the area. It doesn't have to be perfect, of course, because price is not perfect. It's not as sexy as it looks in the diagram, right? But this area, you could look for buying. This was once resistance, right? You see, price came up into this area, had 3 or more touches, right? Each candlestick counts as a touch, and then price broke above. So this is resistance becoming support. And if we scroll over, support becomes resistance. This is support, broke under, resistance. You see, right? 3 or more touches. Even though it's a consolidation, even though they're consolidated, it still touches. It doesn't have to be spread out. 3 or more. 1, 2, 3, 4. Selling. Selling opportunities. Boom. I don't know why it went squiggly like that, but interesting. Anyway, so that's that, right? All right. So like I said earlier, I was going to show you why the higher time frame levels are more important, or they hold more weight than the lower time frame. So we're still on the daily chart, right? So these levels are attractive levels. Price buyers and sellers like these areas, right? Buyers and sellers are attracted to these prices, these areas of price, right? Now, if we go down to a lower time frame, let's say the 15-minute time frame, right? You'll have more levels, right? You'll have levels like this. And let's just make these a different color to differentiate, right? We'll make them white, right? You'll have this kind of resistance here, right? You'll have some type of support here, right? Support becoming resistance, right? You have that. You'll have this, right? And what happens is your chart will be confusing. You'll get confused, right? Because you have all of these different levels and you won't know what to do. you know, well, should I buy here or should I sell? Oh, let me buy. Oh, buy, sell, right? The higher time frames are better targets, right? So when we're trading, right, we're looking at support and resistance, not only for selling and buying opportunities, but we're also looking at them as targets, to exit our trades in profit, right? So we're back on the daily chart. Now look, that's what happens when you mark up too many levels, right? The lower time frame levels. You start to get lines like this, you don't know what to do, right? So we're only going to focus on the major levels, right? Now, it's good to have levels at the lower time frames when you're looking to take scalping trades or a trade that's a very quick in and out trade, right? Maybe you want to take a quick trade on the 5-minute chart, right? And you have some clear resistance here, right? And you want to take a trade and you say, all right, let me take a trade here, and you want to take a selling opportunity, looking for a selling opportunity because price is having trouble breaking above this resistance, right? And you could take a sell, and it, you know, it's a quick trade, it's an in and out trade, you won't be there that long, right? So it's good for that, right? The lower time frames, but the higher time frames are most important. So for now, let's just train our eyes to pay attention to the higher time frames, and then we could work our way down. That's called top down analysis. All right, so we'll just focus on the higher time frame levels, and we'll see that they are also targets, they are also areas of interest where you can exit your trades and profit. So for example, if we say, all right, we want to take a trade, we want to look for buying opportunities at support. This is a clear level of support, right? One touch, right? 1, 2, price broke under a little bit, came back, retested it here. 3, right? This is clear support, broke under, right? Fake out, came back up, it went up, rallied up here, came back down, did it again. You say, all right, well, this is clearly a price that buyers are interested at buying, right? We have this candle with a strong buying rejection. It's a bullish candlestick. Let's zoom in. It's a bullish candlestick with strong buying pressure, right? The sellers, the day before, the sellers came in, tried to sell. They couldn't break below this support. The next day, the buyers came in and totally killed the sellers, right? They won, right? Buying pressure. You can take a buy position. Your target could be the next level of resistance, right? The next level. And if you want to get out of your trade and take your money, get up out of there, right? Always leave in profit, right? Or you can stay in and wait till price gets to the next level. So levels are also targets to exit your trade in profit, right? And so that's that. So we're going to study this, right? We're going to draw up some support and resistance levels over and over until our eyes are trained to see them. And then we're going to move on to market structure in the next video. So like this video, comment, and subscribe, and look forward to the next video.